Hello and welcome back, everyone. The theme of this event necessarily takes a bit of a look back at what the banking union has achieved and where it might have fallen short. Our next panel, however, jumps ahead to the future to take a look at banking in 20 years' time, what that might look like and what that might mean for all of us. Let me hand over now to our moderator, journalist Jennifer Baker, who will introduce our panel.
Thank you very much. I'm very pleased to introduce David Martin is a consulting strategy and regulation partner at Deloitte in Spain. David, what's your vision of the future?
Hello, I want to thank the SRB and the ECB first for inviting Deloitte to the conference. I think it's very, it's an honor to be in this first joint conference that marks the 10th anniversary of the banking union. So I'm grateful to be here. We were discussing in the previous panel the 10 first years of the banking union, and then we're looking at the next 20 years. I think banks are prone to change. They've been here with us for centuries. I think not many companies can say that. So one should assume that they will be changing with circumstances, society, technology, data, and everything that comes, and that's what we're going to talk about. I think if we look at the last 10 years, and a lot has changed. We have bigger banks, we have less banks, we have, I was saying before, an architecture, an ecosystem we didn't have before. We didn't have the SRB, we didn't have a resolution authority or a joint supervision. So if we look at project what the industry will be in 20 years, who knows, really? It's very difficult. I think we can kind of infer from the challenges that banks are facing now what could be the future. And I think the banks are facing a number of important challenges, like becoming the center of the relationship with the customers. I think they're as important as they are. They're not at the center as other competitors are at the moment. So keeping the role is essential. Data will play a very important part in that. Achieving sustainability objectives. I mean, they've been by the regulator, they've been put in a position where they have to contribute to the ESG policies of the European Union, and that they're a very important agent in that change. Emerging technologies. We'll talk about that a lot in this panel. I think that's banks have traditionally invested a lot in technologies, but the speed of change is becoming incredible at a time where there've been low negative interest rates and low margins, small profitability. So that kind of makes it more difficult to cope with the big boys in technology. Talent management. I think when I was younger, working for a bank was a very good option. I don't think nowadays is what the kids have in mind when they finish school or university. There are other startups and there are other places where they want to go. So banks have a challenge in keeping talent. Increased competition for new players. Not so much existing players or peers, but new players like particularly in payments. We see with open finance we're going to see animals we haven't seen before, of course, big tech and other things. and of course, new business models that have emerged as a result of regulation, but not only. And in terms of the trends, I think I would agree, obviously. Data, what we call it, there will be two main drivers. The data economy, so everything about data, who controls the data. I think banks are in a very good position. They have the trust, they have a lot of transactional information from clients, so it's not that they're not at the data center, but they need to be more so if they want to be at the center of the relationship with the client. And then, of course, the digital economy. I think digital economy is very important in terms of we'll talk about blockchain, we talk about crypto, we talk about internet, the new internet, artificial intelligence. So those two trends will pave the way for the next 20 years.
Well, thank you.